Hi guys, thank you for taking some time out of your day and your night rather, and to come for some knowledge. So tonight we're just going to do a super duper quick lesson. It's just going to be about understanding current market conditions and the importance of adjusting your strategy if it is not working. What I'm kind of suggesting is people buying bullish breakouts still and not realizing that it's not super efficient in this current market environment, which is a bearish market. So just to kind of paint the picture more, a lot of people had major success last year when the market was green, right? But fast forward to today, they're struggling this year because they're trying the exact same mentality, the bullish breakouts, expecting different results, but forgetting to realize we are in an entirely different market environment than what we were in a year ago, an entirely different market environment, right? So like, this is very important to realize that if you are currently a breakout trader and you're usually a bullish bias breakout trader, this is something we have to be aware of and kind of just, nip it in the butt, because historically most bullish breakouts and bearish markets are very short-lived. So if you don't recognize that and take profit quickly and instead be greedy, you're going to have a tough time, right? You're going to have a real tough time here. So I'll kind of just go over a couple different examples and show you firsthand why bullish breakouts aren't super reliable in this current market environment. So first one was pretty much actually from today. As you can see, we had one kind of a good right here, about $4 run in about an hour or so, hour and a half, but it was pretty short-lived. Like, this is one of the higher days from a couple days ago, so it was pretty short-lived. And then I'm more concerned about this example over here. A lot of bullish breakout traders probably got faked out right here, right? So they thought, oh, crap, we're breaking through this possible flag, and I'm going to buy the breakout here. And then they pretty much got pooped on, and this is their stop loss getting hit. I highly doubt they're going to be, holding a $3.50 stop loss, right? So this is their stop loss getting hit, pretty much a little liquidity trap, and then we just blast off $4, right? So this is a failed breakout, right? So a lot of people probably got trapped here, especially the ones that are bullish bias nature and still buying breakouts at the top. Like, we don't want to be buying the initial impulse breakout. That's not wise to do. I made a video about this before, but it's pretty much just to kind of sum it up. You don't want to buy breakouts um, through, but the actual initial impulse. You want to buy before it breaks out, or you want to buy during a pullback of some sort, just simply because your premiums won't be super jacked up. But anyway, that's an entirely different topic. But as you can kind of see here, we ended up kind of just making a lower high and then falling back down a couple points. And then when we did finally have a nice rally, it was pretty short-lived, and we ended up just giving back most of the gains the rest of the day. So we hit a resistance area and then pretty much dropped about $4.50 throughout the entire rest of the day. Formed a nice little double top. So we actually kind of keep this in mind for tomorrow. Futures could be bearish, and we could possibly bounce up again, or we can continue to flush. So that's just come foreshadowing for tomorrow. But there's an example of kind of a short-lived bullish breakout. Now this one's a little bit of a better example. A lot of people would probably try to buy these right in the moment. They're like, oh, we're possibly about to break out, I'm going to buy this. Possibly about to break out, I'm going to buy this, right? And then not really realizing we're pretty much just making lower highs for an hour. So there was no real bullish sentiment here at all. But I can almost guarantee you some retail traders did get trapped here, right? They're getting trapped here. So this is a good example of why most bullish breakouts aren't reliable, especially in bearish markets, because one, they're short-lived, and most of the time we don't even create a higher high. Like right here, we didn't create any higher high. We're actually creating a lower high. And then here we barely made anything, we barely made a high. Technically we did, but it was also very short-lived. And then we lost the rest of it the entire day. Like we short-lived breakout and then just boom, right? So that's another reason why we got a tiny bit of a drop overnight, because we had a triple top, by the way. So that's another example. And then here's another example. Same thing. Lots of bullish breakout traders probably got trapped here at the high of day, right? They're eager and they're just trying to buy it, thinking the stock's going to soar. It doesn't. It falls. It doesn't. It falls. It doesn't. It falls. Right. So like this is why you have to be super, super, super mindful of the fact that bullish breakouts aren't really reliable right now, right? You just kind of have to realize that. And if you do decide to be a bullish breakout trader, which is, it's okay to do. I'm not saying it's not by any means. You just have to be aware of there's a possibility that this could be a fake out. And if it is not a fake out, you should be securing profits, sooner rather than later, because there's a good possibility that it can get shorted and just lose all of its gains, like most of the examples I've showed you already. Here's another one. We didn't even really do anything significant. We actually pretty much just got shorted every time the bull stepped up. Like we made a lower high, tried to make another high up here. We tried to make a higher high right here, but we ended up getting failed, and then we just lost all the gains. We lost all the steam. So reviewing this and kind of understanding like where you are in a different market environment is super, super important, really. Super, super important. Because I'm not saying bullish breakouts are necessarily bad, but like we said, you just have to be super vigilant and one, not buy the initial breakout, at least buy before the move happens. So your stop loss is, tighter, or buy during the pullback. So your premiums are cheaper, and also, your stop loss is going to be tighter in that way as well. Now, bearish breakouts, on the other hand, since we are in a bearish market, they do have a lot more follow through, right? So like breakout trading isn't necessarily a bad thing in this environment. You just kind of have to flip your mental bias. Like we just can't be bullish all the time when we're in a bearish market, because pretty much everything that we've experienced over the last couple weeks has been short-lived for bullish breakouts. Like it's been very short-lived, and most of the time the market just rolls back over and just gives up all the gains that it did, right? So like here's another example. We weren't if like once you review this, we weren't bullish basically the entire day. We had some short pops, but no time in this day did we make a higher high. Like we made lower highs the entire day, right? So like I can guarantee you, same thing though. Retail traders probably got trapped out quite a lot. They probably got trapped out here, trying to be savvy and buy the quote unquote dip, and it keeps dipping. Same thing here. Same thing. They just keep buying the breakouts, and then it gets rejected. So you're basically, you're just kind of just wasting your money in a sense, especially if you don't have risk management. Another example, like I can show you these examples for weeks. Like this has been happening. This is a theme. Bullish breakouts clearly aren't doing very well in this environment. So if this is resonating with you and you find yourself mostly bullish bias still, and it's still like inside your mind, it's like hardwired because you're, a COVID trader and you're mostly bullish bias. This video is for you pretty much, because if you're struggling and you're still with your bullish, breakout bias, you kind of have to fix that, or you're gonna have some trouble over the next couple months. I can just say that. because we're not going to a bullish market, you know, in the next month. We're slowly declining and declining. Like if you think this is bad now, like once we get more peak recession, like we could very, very easily continue down here, like very easily. And it's not technically speaking off the table to come back during COVID, or excuse me, pre-COVID highs. So like this is pre-COVID high. So like that's technically speaking the point of control, like that's the median. So like this is a realistic target. So like if you think, oh, you know, the dip's in, time to buy the dip, like we could very well just get another short-lived pop and just come right back down, right? So kind of this is the things you want to be aware of, especially in bullish markets, or excuse me, in bearish markets. A lot of the pops are very short-lived, so you want to be very vigilant with that and take profits sooner rather than later, because you can get rejected very quickly. But that's pretty much all I had for tonight. It was, you know, a quick and easy one. Do you guys have any questions you wanna talk about? Any comments? Anything at all? What exactly is a liquidity trap? Yeah, good question. So hold on, let me find it real quick. So when I kind of talk about liquidity traps, uh, so all right, now let me go down to smaller time frame. Okay, one sec. So you can see over here from a couple days ago that we had some participants inside this area, right? We had some participants inside this area, okay? So there's definitely participants willing to step up here, and there's definitely some sort of liquidity in this general region, okay? So what I mean about liquidity traps is basically like market makers, just to like kind of sum up their role super quickly, is like they just provide liquidity. Like that's what they do. They provide liquidity, or they act like if the market is super bullish, they have to step up and act as a seller. If the market is super bearish, they have to act up and act like a buyer. They basically have to keep the equilibrium in a sense, right? So what happens is this is pretty much a lot of liquidity kind of picking up and just drying out. So what I mean by that is, okay, so a lot of retail traders probably try to buy the breakout here, a bullish breakout, right? But it ends up going the opposite direction. So give or take, there's stop losses. There's being stop losses being hit. So like that could be a possible stop loss being hit, or somewhere down here it could be possible stop losses being hit. So we have to remember, for the stock market is transactional. So like for every buyer there's a seller, for every seller there's a buyer. So whoever is selling their position that, you know, bought the top in a sense, and then they get stopped out, those are the people buying down here. So we're getting more liquidity being provided into the market to help us get another leg higher, which is what we got here. We got that nice little leg higher for about 2.5 points. Then we actually made a lower high, and we probably trapped out more people here, you know, more bullish bias people. We got trapped out again. So here's more stop losses being hit, right? Here's stop losses being hit, stop losses being hit, just on the entire way down. So the smarter people that are actually positioning themselves towards the bottom of the bounce instead of buying the breakout, they're getting filled, providing more liquidity for the market in order to drive the price up higher. So that's kind of usually what happens. Like that's another reason why I stress, you know, not to buy the breakout, because that type of stuff can happen very often, you know, especially in a bearish market. That type of stuff can happen extremely often. So that, like, but that's pretty much just what's happening. There's stop losses being hit, and then there's just kind of just liquidity being grabbed, so we can kind of make another leg either higher or lower. Hope that answered your question. I kind of made a video about this, but can you talk about how people create levels for the next trading day? Um, well, I have a video on my YouTube about like how to actually make levels. I'll post that for you. But if you, let's just pretend you already have your most of your levels already kind of situated out. So what you would do is, let me go out real quick. You would pretty much just, all right, let's pretend I have all my, my major levels already, but I'm doing more of an intraday trading aspect. So I could just be like, okay, since I am an intraday trader, I'm going to be looking at like maybe the last 3 days of the market. So like this day, and this day. So I want to know what levels held. So in this case, this is low of day a couple of days ago. This is low of pre-market down here, which makes sense because we had participants stepping up here as well. This is high of day for this day. So this is still an area. Because if you look here, that once high of day ended up acting as a perfect support until it, flushed. But at one point in time, it was a perfect support on the hourly. And then from today, I would be marking this level. So the high of day for this day. So like today, you could even offer possibly other area. Yeah, so you could offer this one as well because there's multiple touches in this general region. Somewhere over here. If I look on the larger time frame, there probably definitely is. And then you could just do the pre-market low. So this way you can kind of figure out all the key areas in the in the previous days. Since as an intraday trader, like that's what you care about is like the most previous current days. And then once pre-markets open and everything in the morning, and we're right before open day, you can just reevaluate and be like, oh, here's low of day pre-market, let me make a level here, or like here's high of pre-market, let me make a level here. So you can get the pre-market low and high. And then also this is a separate topic, I suppose, but I did make another video on this one with the supply and demand aspect. You could create your previous day supply and demand or your pre-market supply and demand. It's like, for example, this one's sticking out to me. Like this is a supply zone to watch for tomorrow. So this is what happened at the end of the day. So we created a little supply zone. So this is basically just saying that there's sellers stepping up right here. Yeah. So I'll link that in the chat if you want to check out. It's I made a supply and demand video, and I made a video about how to make levels. So that'll help out for you. Hope that answers your question. Let me ask another one real quick. Do you mark supply and demand zones on multiple time frames or only use them on a specific time frame? No, definitely you want to check out multiple time frames for sure, because one time frame can show you an entirely different picture than a different time frame. So like, and another thing, just to really quickly get into that point, let's just say, for example, now I'm just gonna like just pretend, just for sake of time, just pretend that this is a huge demand zone, like a huge buying zone, like way down here, all of that, right? So like clearly that's a big ass zone, that's a huge zone. Like that's a 12, 14 point zone. So like you would want to check out other time frames to see, hey, can I possibly find a buying zone, a buying demand area somewhere in here, so it's smaller. And then just for sake of time, just for sake of argument, let's just say pretend this area is a zone. So now I have a smaller zone inside my bigger zone, thus helping out and kind of giving me more information. Hope that helps. But if you want more of a clear picture and like all the explanation about it, I made a more thorough video on my YouTube if you want to check it out. Any other questions before we end our little session tonight, guys? Awesome. So, okay, I just wanted to make sure no one had any questions. All right, so just a quick little announcement, since I had a couple people actually message me earlier today about the mentorship I mentioned last week I planned on doing. I actually started that last night, but don't worry, everything's recorded. Just real quick, it's a 30-hour duration over the course of a 3-month period. We'll be going over tons of different topics to help accelerate your learning curve. After the duration, we'll be reviewing your trades together monthly, analyzing them, and figuring out what we need to adjust for improvements. My goal for this mentorship is to help you turn you into a profitable, self-sufficient trader, not relying on signals. So if you're serious about this and you're curious about it, just let me know. I'll open up one more spot because people are still asking me about it. But our next session is tomorrow. It's going to be Tuesdays and Thursdays at 8 p.m. So if you want to further your education, just please reach out to me. It'll be first come, first serve. But if you guys have no other questions, thank you again for all your support. Thanks for coming in to listen, and enjoy the rest of your night, and please stay safe. Thanks again, guys, and good night.